Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today's guests are Dr. Milan Sambarak. Welcome to the show, Milan.
Thank you for inviting me. I hope I can contribute.
Yes, we all hope for that. And Jim Eid from Int Foundation. Welcome to the show, Jim.
Thank you, Sasha. Great to be here.
Great to have you, Jim. And today is a very important day on the stock. It looks to me that we are in the green territory, something like this, for example. But you know what? I'm getting now really scared. You don't hear it very often from me, but the fact is that Trump wants to increase the debt, the national debt of the United States, for $4 trillion. So instead of decreasing the debt, he's increasing it. And at the same time, he's going to decrease taxes for his friends for $4.5 trillion. So essentially, he wants to borrow from the future of American people further $4 trillion and divide this money among his friends. This is incredible. It's unheard of. In the way he is firing people left and right, I think it's next week we will have an employment report. I'm getting scared of it because there will be shown a lot of newly unemployed people, and especially people who are working in government. There is no lineup to hire them. There will have a lot of difficulty to find a job because if you are working for U.S. government, there are no alternative companies or organizations who could provide you with employment opportunities. Jim, what do you think about it?
I am equally scared, Sasha. I had hoped for the best and prepared for the worst. And I think the worst is happening. Under the Biden administration, unemployment was down, wages were up, corporations were reporting record earnings, the stock market boomed. And already we have seen signs that this childlike, peevish tariff kind of stuff is threatening the American consumer with higher prices. Inflation is going to get worse because tariffs hurt the American consumer and the corporations. And he thinks that anybody he gets mad at or doesn't do his bidding, he can slap a tariff on them. And this is just, the opposite of economics 101. You learn very early on, if you study economics, that this is just not the way to go. And he thinks it's the greatest thing since sliced bread. So, I don't know. And he's turned our allies into neutral parties, suspicious. And he's trying to befriend our enemies. So the domestic scene is alarming. And the international scene is even more so. And so he's uniting the world against America. He's made America a bully again. And Elon Musk has proven that America is the greatest country that money can buy.
Yeah, you're right. You're right. Milan, what I noticed in the last day or so is that usually when interest rates are going lower, it means the stock market is going higher. Now, what's happening today and yesterday, by the way, is that the interest rates are coming down and stock market is coming down, except today. Today is this very special day because of the NVIDIA earnings.
The earnings report is coming out.
At 4:20 later on today. And you see, okay, I have a long position of NVIDIA, of course, and I'm hedging it every possible way. Why? Because for NVIDIA to go higher, it has to be 100% perfect earnings and predictions for next quarter, and the Blackwell is doing really well, and like everything 100%. If it's only 90% and 10% is not what was expected or anticipated, the
Mhm.
stock will tank. And with that, all market will tank. So
Yeah.
what I did, well, I have covered calls and so on, but I also did very unusual thing. What I don't remember when I did it last time, but I bought naked puts on Nvidia, and you
Mm.
know which ones? 90. Why 90? Do I believe that Nvidia will go down to 90? Not really, but uh, they're so cheap that even if Nvidia will move to 120, these puts will come up in price very handsomely. So, in a way, again, I'm trying to hedge every
Interesting.
possible way.
Interesting. It
Yeah,
is.
it's very unusual. Never done it, but so Milan, what do you see as the market as a whole? I know you've been pessimistic now for some time, and probably rightly so. So, what's your opinion?
Well, first of all, concerning Trump, he's going to make every effort to stay in power forever.
Yeah, and
And
increase that power for another 4 years as well.
yeah, and so he has offended so many people, even within his own party, that he's liable to get kicked off by his own supporters because he's offending so many of them. Concerning investing, selling puts and calls has produced an average of 1 to 3% per month, which works out to 12 to 36% per year. Selling puts and calls is so easy. Making 12 to 36% per year is a very handsome income. And trying to outperform that by picking stock, your chances of doing so are close to zero. So why even try unless you enjoy it in your fund portfolio? And concerning fund portfolios, I've said this before, I have three things to say. One is nobody needs one. Two is make sure that it's small enough that if you lose it all, it doesn't change your lifestyle. And the most important of all three is don't keep records because you're going to be disappointed. Beating 12 to 36% annually so safely and so easily, why would you pick stocks?
Yeah, Jim. Actually, why? Why would you pick stocks?
For the fun of it.
Well, it's fun for me, especially when I see this. The only red on my screen is Apple, and Apple has been such a successful stock. I don't mind an occasional decline. Um, I have profited greatly from my shares in Apple. Also, Nvidia, and these stocks. Again, I go by what I know. I stick with what I know, and I stay disciplined. I'm not an emotional investor. So when I see a segment, with a tech segment in this case, where AI is just becoming the currency of the day, and the companies that are best positioned to take advantage of this, that are well run and have a track record of revenues, that is my interest, and that is what I buy. And I tend to buy and hold until I hit a sell trigger. For example, both Tesla and Nvidia doubled, and I sold. Tesla went on to greater heights and then crashed. Nvidia ended up splitting back to the level that I bought it, and so I bought it again, and it's made a handsome return for me already. And the other tech stock that I've been touting is Marvel, MRVL, and that has done very well for me, although it has been punished greatly. First by the bogus Chinese AI scare that has nothing to do with the earnings rate of Marvel and Nvidia, and they will continue. But the Trump effect on them is significant. I think that he can do serious damage to these companies. So I'm on tenterhooks here. I don't know how much to increase my cash position, cash equivalents, of course. And but I'm sorely tempted to, even though these returns have been extraordinary over the last 5 years. I mean, extraordinary.
And trust me, if for these 5 years you would be staying in S&P only and no fund portfolio, you would generate, say, on average 10% return, provided that you would sell covered calls and so on, and you did all the proper things. So you would generate 10 each year, so it's 50. If it's compound, it's more, probably 65% in 5 years. And with staying with stocks like Nvidia, you can generate 65% in 1 year, sometimes even better than that. So this is probably a merits why one could justify actually to have fun.
Well, yeah, my core portfolio is outperforming what Milan is talking about, or but it's what I would call a modest rate of return, which is very comfortable, and if it's less risky, I recommend it for many people.
Absolutely.
And in my fund portfolio is currently for the last 5 years outperformed my core, and the core has done extremely well, and so I'm very very satisfied over the last 5 years, and now I'm worried that the joyride or the roller coaster has gotten to the top. So,
Well, yes, Mark.
Yeah, I had a quick question for y'all. Speaking of roller coasters and speaking of folks that are not friends or fans of Trump and everything, two companies that I know were doing well economically, and they were probably in your fund portfolio that y'all are always talking about and everything, have now gotten in trouble and are possibly heading toward bankruptcy based on what Letitia James is doing in New York. So apparently NetSpend, which is a major credit card and everything, got some illegal fees and all along those lines, and they were slapped big time. And then I think it was yesterday that DoorDash got hit very hard as well. And a lot of people didn't know that whole notion of getting food and everything, but they were there in that New York area. They were not getting the tips that they were deserving and everything. So they got hit very hard, like in the $1 million range and everything. So I'm thinking that DoorDash might be hurt as well. But I just wanted y'all's take on that when these investigations create these $1 million debts that could possibly hurt companies.
I thought that DoorDash mixed orders and delivering the wrong food to wrong people. So that could have been a huge lawsuit just because of that.
Well, you can relax because under the Trump administration, regulations will be lowered to the point of, it's going to be easy to rip off customers. And companies are going to be reporting record earnings by taking advantage of people. And this is what Trump has made his fortune on, taking advantage of people who don't have the bankroll that he has. And if you, for example, perform labor for him, and he doesn't pay you, and you take him to court, he will sue you and claim that your labor did not produce the results that he contracted for. And so, and he won't pay his lawyers and all of that kind of stuff. So this is the corporate environment that Trump wants.
Yeah, just to clarify what I was talking about, DoorDash, because it was reported yesterday, has agreed to pay $16.75 million to settle a lawsuit by New York's Attorney General accusing it of pocketing customers' tip for delivery drivers while misleading both customers and drivers about the practice. So apparently they were pocketing the money in their own corporate environment.
Yeah, and you're going to see more of that, not less. Now, these suits this is an example of people being taken advantage of, and nobody is going to be looking out for them anymore. So expect more of being ripped off and fewer of the regulations and fewer law enforcement of those regulations.
I never had any positions on DoorDash in my fund portfolio or even portfolio or anywhere. Somehow I never was attracted to this.
I missed that news, yes.
On a positive side, I'd like to mention, I think, Jim, you have some NVDY, the dividend paying.
Yes, after you promoted it a couple of times.
Dividends they're paying this Friday. Have you heard the news?
I have not.
For $1.60 per share.
Yeah, and the share price is 20-ish.
Yeah, 20 something. Yeah. So in 13 payments, if these payments will remain the same, you get all your investment return and some.
Yeah.
This is absolutely incredible. I was counting on about between dollar and maybe $1.20, but when I saw today $1.60, actually a little more than that, I was quite impressed. So this is really helpful, and so I'm expecting Friday to get about 16,000 US dollars. So in Canada, it's like 20, even more $1,000. So it's
I have a
helps.
question for the panel because I have some stocks that I purchased, but I'm just curious what your opinions are. One is Intel. Okay, my review of Intel, it's pretty beat down. As a matter of fact, even Bill Gates was a little perturbed at how low it is. So I stocked up on some Intel stock, but I'm just wondering what the panel thinks about Intel. Yes, since you're in the Intel world.
I did the same thing. I bought some Intel.
You did, okay.
Under the same premise. It's beaten down, and it was an old dusty corporation that really needed to be beaten up a little bit. So I don't think all of it was undeserved, but I do think people piled on. So it was lower than it needed to be. And also it profited by the Biden administration's CHIPS Act. It got a healthy infusion of cash based on that. So but I did not invest a lot in Intel. It has tried to do a pivot into the AI field, but it still trails companies like NVIDIA, Marvell, and even AMD. It's not, but I think as I said, I invested not a lot, but a couple lots.
Yeah,
we can discuss various stocks and the pros and cons of investing in individual stocks, but there's one issue that we all need to be concerned about. As you know, I recommend against buying individual stocks, but buying an exchange-traded fund which tracks the S&P 500, which means buying the American economy as a whole, the strongest economy ever in history. That's a safe way to go. I don't want to talk about that. What I want to mention is the Goldman Sachs and the Bank of America, based on the fact that the market is at an all-time high and overpriced, they are predicting a 0% to 1% return on our investments for a decade. I
got the naysayers, and I appreciate that. But in the meantime, I'm investing. So let's go to another stock that I purchased recently, Ford. What are your thoughts on Ford Motor Company? I see that beat down. It's like trading less than $10 a share. So I loaded up on some Ford stock. I was going like, Ford, really? Beat down? What's your thoughts about that? My only negative was they do manufacture a lot of products in Mexico and they bring them into the United States. But when I see good value, I know you guys don't do it. I'm kind of a value investor. I do it with real estate. I do it with stocks. If I see something that is low value, beaten down, but has good fundamentals, I'm sorry, I buy it.
Absolutely.
Okay? I buy real estate that way, and I make a lot of money buying that way. I do the same thing with the stock market. And I got enough in the S&P 500. I can choke a horse. So I'm not interested in any more S&P 500 stuff. So what's your thought on Ford?
You know that Ford was an anti-Semite. And actually, the word anti-Semite is the wrong word because a lot of Arabs are Semites and so on.
Very true.
We should talk about anti-Judaism. And Ford was that way. Jewish people don't buy Ford automobiles.
Yeah, but the thing is, that was like 100 years ago. I'm just curious about the stock today. Another one I purchased this week was Micron Technology out of near your neck of the woods. It looked to be beaten down. I bought a lot of it, and it went down further. And I was going like, okay. But when I looked at all the analysts, they all give it a very high rating. And again, it's not like, oh, I need to sell tomorrow to make a profit. I'm willing to hold Micron. And I made a mistake years ago by not loading up on Micron. So what are your thoughts about Micron out of Boise, Idaho?
Nick, let me ask you, how much time do you spend selecting stocks and looking at the funds and so on?
Depends if I'm busy. It depends on how busy I am. In other words, the thing is, see, I have money that's professionally invested. So I have my professional money manager. I look at it maybe once a quarter, if that. Then I have my fund account. I trade in my fund account. Then I have another fund account where when money comes in, I place it. And then I have a lot in cash. So it's not like I have the market collapse. And I have a lot of real estate. So, what I do is I'm always looking for value when it comes to investing. And I'm looking at things that are depressed. And I would have gone to Palantir, but the price earnings ratio is too high for me. Same with NVIDIA. I hate high PE ratios. If my company had the PE ratios these people did have, I'd be worth 120 million, like no kidding. Okay. And so the thing is, when I see these PE ratios that are out of control, I can't do it. In spite of the fact they're momentum stocks and all this other stuff, I don't buy high PE ratios. I buy low PE ratios, solid fundamentals, really well managed companies that make cash all the time, and things that look like they have potential on the 52-week high low. So, it's kind of fundamental investing, and it looked like Micron was one. I made a mistake not to buy it at 64 a couple of years ago. That's trading over 100, so I figured I'm back in Micron. Last one I bought Dino because I believe the energy industry is going to do well. So I bought Sinclair, and again, same reason, low PE ratios, high low, a depressed stock, giving me a lot of upside relative to the downside. So, I made 1, 2, 3, 4, 5 purchases and put a lot of money into these 5 stocks. But then I got a lot of other ones. So I don't really, like if this all tanks, Milan, it would make no difference to me, But if it does do well,
question for you, Nick. How many professional money managers can equal the market after expenses?
Oh, actually, okay, I can tell you what you're preaching. You're preaching to the choir on that one, because we sell a lot of equity index annuities, and I was reviewing the equity index annuities where you link to the S&P 500 versus Goldman Sachs and JP Morgan. Guess what? You're better with Goldman Sachs, JP Morgan, and S&P 500. What are you better with? Which index?
Nick, I see a lot.
500. Hello. Okay, come on, Milan. The S&P 500 killed Goldman Sachs and JP Morgan. So, so you're preaching to the choir. I do understand that. And so, since we manage literally hundreds of millions of dollars of pension funds, I can't even tell you how much, maybe close to $500 million. We monitor that part all the time. But actually, my financial advisors do that more than I do, in terms of that. But I do take a quick peek as to, hey, how these performances are doing. And the latest peak I looked at was the S&P 500 versus Goldman Sachs and JP Morgan. Frankly, S&P 500 killed them. And they have to disclose all this because, especially SEC registered products, they disclose it when you read through it. No one reads through these things. You read through the prospectus and you go like, why would you invest in Goldman Sachs and JP Morgan? Beat them. Just go.
We have
Hey, I got some money with Goldman Sachs and JP Morgan.
I'd like to mention something interesting. I'm beside investing in some riskier assets class in my fund portfolio. What I also like about fund portfolio is being able to experiment, try new strategies.
Oh, yeah, that's true. Right.
Like one I did today.
Right.
In the morning, while I understand that the bigger picture is very bleak, the stock market, of course, will go down big time. But today, in the morning, the market was very positive and still is. So what I did, I bought 10. I did it with Triple Q, which is Nasdaq. I bought 4 calls on Triple Q, and I bought 4 calls. It's not a big investment. We're talking about less than $1,000 probably overall. So I bought 4 calls on the market will rise, Triple Q, and at the same time 4 puts. So it just straggles. So you're going both ways. And guess what? So at one time, the stock market went up. So I sold my calls, made some profit. Then market reverse started going down. So the puts went up in price. I sold those, made profit again. So this is okay. Overall, I made $700. Let's put it this way. Not a big deal. Okay, you can go to a nice restaurant for dinner, probably. But the fact that you beat professionals, because who are selling use stalls and books, the pros, the market makers, all these big gurus, and I squeezed.
It's like beating a title player. Yeah.
I squeezed $100. Bye bye.
Yeah.
This is incredible. It's not $700. It's $10,000 of enjoyment. That's what.
Yeah.
Yeah, good enjoyment. That sounds good, Sasha. Sasha, I had a question based on what Nick just asked you about Ford and everything, because there is a company that y'all have talked about a couple of times, and we definitely have talked about the leader of that company, but they're not the only ones game in the town and everything, because everybody thinks about electric cars and they think about Tesla, but actually my brother just recently bought a Toyota electric car. So Toyota makes electric cars, and I have a friend that actually I saw yesterday that drives a Dodge. He and his wife both have Dodge electric cars. So I was just wondering, in terms of either a fund portfolio or a regular portfolio and everything, what is your thoughts around the electric cars, particularly those made out of Japan, because that would be Toyota, or Dodge, which is an American company?
Can I say a few words about that? I've been driving a Tesla for 7 or 8 years now. I got it when they offered free supercharging. I live walking distance of a supercharger, so I never pay to move my car forward. Last year, Tesla sales dropped 1%, while the electric vehicle market rose 24%. And the reason, when I go to a supercharger, I always talk to the other people there, and yeah, everybody keeps saying the best car I ever owned. But I'm not buying a next one, not because of the car, but because of Musk. Yeah, because of Musk. Yeah, he's offended so many people that some people are not buying Tesla because of that. My sister's daughter and son-in-law have Tesla. My daughter doesn't drive it because of Musk.
Yeah, the thing is, when I did the research on cars, the best in class and best overall was actually the Toyota Avalon and hybrid, which is what I bought. So if you're buying, it wasn't a Tesla. But I did have some neighbors that bought Tesla, and I keep shrugging my shoulders. Why would you buy that when the hybrids are best in class and best overall, according to Consumer Reports, which actually does some pretty good analysis? So I didn't buy that. I did buy Devon Energy, which is kind of a unique play, because usually I don't stretch into some of these strange places. But it looks to me that the energy companies are going to do quite well under Trump. I think
that's true.
So I'm just taking, you pay your quarters, take your chances. The only thing I don't like about tech stocks is the P ratios are way too high. Even
there's contradictions. Trump he's pronounced it several times that he wants to drive oil prices down to $40 a gallon, maybe even 30. So how energy companies will do so well if the price indeed would go down? Actually, I looked very carefully at the chart for oil. There is a very realistic scenario that oil will move down. I'm not sure about $30, but 40 is very realistic scenario. So how they will thrive in $40 price range?
You brought up a good point, which is one reason I'm talking to this panel, because the thing is, you get the information in one way, you've got to look at some of the other things, Sasha, and one of the things that you just described, what happens, the energy prices go down. If Russia settles in the Ukraine and Russia dumps oil in the market, that would hurt. If Saudi Arabia changes their mind, dumps a lot more oil, it hurts. So, whenever you go these directions, that's part of the reason you don't put all your eggs in one basket.
Yeah.
Devon Energy is just a beat down energy stock, but it looks solid, looks like it has good fundamentals. And same with Dino. And then like if you hold long enough, it'll all come back. So, I just go, well,
just see.
That's clever, Nick. In my opinion, I do much of the same thing. When you talked about Micron is a global company that and you said it was beaten down, but at $100, it's not exactly a bargain.
No, it wasn't a bargain. Then the PE ratio was pretty high, and I put a lot of money into it. But it's only because I had an opportunity to buy it at 64 and I didn't. It's just like NVIDIA. When Sasha was screaming about NVIDIA, I bought, but I got out too soon.
Yeah.
Not knowing that, hey, it would come up. And then I bought Pegasystems, and I didn't get out soon enough. It just took a reversal after it's owned by Ellen Trefler, one of our famous chess players. And it took a reversal, and it's lost a lot in the last couple of days. So, one problem of playing the market, that's the reason you have your fund portfolio. And Milan asks how much time do you spend, sometimes I don't, is these stocks can turn on you and go the other way.
Yeah.
And if you're not watching it every day, like I was.
Hey, Nick, I've got good news for you and Sasha, because while I was talking to y'all, I just sent him an invitation, so it was okay with Sasha because it is his show. But there is a gentleman that is a football player. You can find him on YouTube and everything, and he goes to your university, the University of Florida. Apparently, he named Coach Prime. They gave him that nickname, but I'm trying to reach out to Richard Fain because apparently he's one of the few NFL players that has actually made money, and he's got a YouTube channel around finances and how he did it and everything. So if it's okay with you, Sasha, I'm going to invite him and see if he'll come on our Modern
More
Investor.
the merrier.
Mark, you've promised so many times to invite a specialist in crypto.
I'm still working on that.
Please bring them on. Of course, I'd like to do. By the way, crypto is not having good times.
I still haven't figured out how crypto makes money.
Richard Fain is a market specialist.
And I've talked to
the same way that you do off of the stock.
Bring them on, baby, because I've talked to the crypto people and they talk around in circles. And I go, look.
He's not a crypto person, Nick. That's what I'm trying to tell you. He is a regular investor. He makes his money, but he's an NFL football player that makes his money off of the stocks. You can look at
I know how the basics of oil and gas works. They drill the oil and they sell it to the suckers who use it. Okay, so that's pretty simple. I know the technology.
Drill, baby.
They build these little chips and everybody buys it. I mean, I can understand that.
Yeah, but the thing as an oil, crypto is based on the same thing. Drill, baby, drill, but crypto instead of oil. So
energy.
They're producing more and more cryptos and selling it to each other, and they have a lot of fun. However, crypto reached recently 108, slightly more, 108,000 per Bitcoin. That happened just recently. Now, I looked very carefully at the chart of crypto and compared it to S&P 500, which Milan is a big proponent. And what I found that there is a relationship. And when the market goes higher, crypto is going higher. Now, when the market is going down, crypto is going down. However, when the market, you can see on individual stocks, very clear line of support and resistance and so on. On the crypto, the resistance now, it's say 108. Now support is nowhere. There is no support on crypto. It can go, most likely it will go down to 70, maximum 75,000 per Bitcoin. That's where it will become a little bit more interesting, still risky, but more interesting. Right now, I wouldn't touch it. I don't know, maybe some people who are very brave and have much more guts than I do. Those people are not too many of those, but there are. So they're welcome to go in and buy crypto as much as they want.
Yeah.
I would touch it before it will go down to 70.
Okay. When you buy a company, Sasha, you buy assets and liabilities. Am I missing something? What is the asset of a crypto?
Well, that's actually one of the questions I was going to ask you. There is no asset, and I hear y'all's argument. I'm just trying to get this gentleman makes money off of stock market investment, which is what y'all talk about all the time, real estate investment, the additional streams of income, and something that I'm not familiar with because I'm not in y'all's game and everything. What the heck is credit card arbitrage? Because apparently that's what he also encourages people to make money off of, and I have no idea what that is.
Yeah. It probably is doing this, which you can do, because I've got these huge lines of credit, but the problem with credit cards is their interest rates are astronomically. So they push all these credits. So I've got zillion, 6 figures more available in credit I can use anytime, and I don't use any of it. Why not? They want 25% interest. That's ridiculous. But Mark, every now and then they'll come out with 0 interest credit cards trying to suck you in. And that's when you can do some arbitrage, because basically what you do is you take the money in, and then you invest it in even something very conservative, and you make the spread. So I've done that before, and that's not so bad. So you can make the spread, but you have to have really good credit, and you have to be off, and you have to watch the offers that come in, and you take it. And seriously, you can get 0 interest, sometimes 3%. We borrowed like $250,000, maybe 285 at 3%. And when I borrowed it, I thought, hey, that's a bad deal. But then we put it in 5% CDs. It wasn't so bad. You're making the difference.
I tell you, why don't you watch some paint dry? Because that's just boring to me.
Yeah, I know. And you know what, Jim, you're right. It is boring. Borrowing at 3, reinvesting at 5 is boring, but it pays.
Okay, I will go after this program. I will go to buy a lot of paint.
And see, this is the thing about some of these companies that have real assets, real liabilities, real balance sheets, and financials. They're in very boring things, but they make money. They print money, and that's the
revenue streams. No debt, high revenue. Ratio is. That's what I look for. But Nick, your last comment on your stocks that you bought was Ford, and I'm going to ask a question instead of answering it. What do you think the Trump effect is going to be on cars and in domestic made cars? I'm very against right now.
February 3rd, all 25% tariff is coming against Canada. And Canada is producing a hell of a lot of cars, which are being sold in U.S.
And I think Ford needs Canada's parts.
Well, also Ford produces a lot of cars in Mexico, and the tariffs, if they're importing from Mexico to the United States, can hurt a lot. And that is a risk that I'm willing to take for right now. And it's factored into the price. I think that's
okay.
Down right now.
You're right.
But only one market. Ford doesn't have to sell to the U.S. They can sell to other markets that don't incur these huge tariffs.
Yeah, but there's still the production costs.
Yeah, if you look through every one of these stocks, they have risk, as you know. I mean, you just pointed out the energy stock risk. And then there's the risk on the tech stocks, the high PE ratios, and other competitors coming in. So the sad part with all stock investing, there's risk involved. There's no
and that's why Milan makes the point all the time: don't play with money you can't afford to lose.
Yeah, right. Yeah, and the thing is, it doesn't make any real difference to me. I got a lot of money relative to what normal people have in every one of these stocks, but for me, it's not. So I just go, okay, fine. If I lost it all, I wouldn't be crying.
That takes a lot of the pressure off of investing.
Yeah, right. It does. Yeah, man.
A couple of things I'd like to mention in connection with what Nick talked about. First of all, we have rules-based investing, which is always right, and we have.
Here comes your contribution finally.
Okay, and we have judgment-based investing, which is wrong much of the time. Now, Nick, you talked about not putting all your eggs in one basket.
Correct.
Benjamin Graham talked about, yes, put all your eggs in one basket, but then watch that basket.
I know. I have his book, The Intelligent Investor. I'm sorry, he's so full of it. You can put all your eggs in one basket and watch that basket just collapse right in front of you. I've done that before. So Graham needs to be right. He's dead, so he's not going to be right.
Not if you hold an exchange traded fund which tracks the S&P 500.
Well, you have cash on the sideline, so you're playing a game where, hey, I've got money in the S&P, but I'm hedging myself with cash on the sideline. So if the S&P thinks I'm going to put more cash, you're rebalancing. So you're not 100% the S&P 500.
Absolutely. No one should be 100% invested. I don't
think.
One
reason clients don't do exactly what you should do is they don't want to spend any time with it, so they turn it over to professional money manager. And there's a lot I don't want to spend time with, so I got professional money manager managing a lot of my assets, and I'm okay with that. But I also like to mess around with my own because it's fun to watch the market. I can't watch it when professional money manager, all I do is get over.
And you have to have skin in the game.
You gotta have skin in the game, baby. You gotta have skin in the game. And see, this is one thing they should teach younger people. It's one thing to play the market with no skin in the game. It's like playing chess. There's another thing to sit in a tournament and play for money. Okay, when you're playing the stock market, playing for money, you're looking at the market a little differently.
You concentrate and focus a little bit more.
Yeah, let's talk about.
You're right. You're right. I hate to say it. I do.
Just think about core portfolio. I don't have professional money managers. I just do have high-paying dividend stocks.
Right.
One of them is paying 8.5% annual, and it going high when the overall market is stagnating or going down.
Yeah.
I'll give you at least one name. It's Altria. It's
Oh,
BI, American Tobacco. People hate the stocks, obviously, and they're horrible stocks. They're just making money. That's
they got a great dividend. It's over
You know,
It,
And
it-
traffic high dividends, and you can sell covered calls on those stocks. I don't do that in my. I even don't have in a core portfolio. I even don't have the margin account. I just don't have. Even if I wanted to sell some covered calls, I just can't because I don't have an option.
and you don't even reinvest the dividends, do you, Sasha? You just
I don't reinvest. I'm taking them out when I do my trips and I want to fly business class and so on. So I'm taking out dividends.
Sasha, I mentioned earlier, Sasha, that there's a group of dividend-paying stocks called dividend aristocrats, and dividend aristocrats are stocks which have been paying an increasing dividend every year for more than 25 years.
And they're not even near the dividends that I'm generating in my corporate.
Yeah, Altria is ultra high.
If you buy funds made up entirely of dividend aristocrats, you would not have done as well as simply holding the S&P 500. So why not simply hold the S&P 500?
Differently, I had a study that said if you had bought the dividend producing stocks of the S&P 500, you're better off than doing the S&P by itself. But you got to really look at the studies, to see what they're.
cherry picking.
You're cherry picking, right? But a lot of the studies are doing on time frames because I used to do these things, and it really makes a difference. Not what you buy, it's when you buy. And people don't know that, and it can make a big difference in when you're not manipulating, but you're showing people returns. It's
the other thing that people don't understand is we should have asset allocation, which accounts for more than anything else in investing. And our asset allocation should be perhaps 50-50, 50% in the S&P 500 as represented by, let's say, SPY. It's one of the best stocks representing it. So 50% in that and 50% in cash or near cash. How much does Wall Street make on our cash? Not very much. So they don't want any of it to be in cash. We should have a allocation of 50-50, 60-40 is good, 55-45, anything like that, close to that 50-50. Anything like that is okay so long as we have a lot of cash all the time. That way, when the market goes up, in order to get back to our asset allocation, we are taking profits. When the market goes down, in order to take advantage of the benefits from our asset allocation, we are buying bargains. The exact opposite is happening most of the time. In rising market, when it's expensive, people are jumping on board. When the market is cheap, people are running for the doors instead of buying asset allocation.
You're following the Warren Buffett theory because Warren does exactly what you're saying. He has a lot of cash on the sideline. How he manages Berkshire Hathaway, and he has money in stock, but he does have a lot of money on the sidelines, so he can do exactly what you're saying. When there's blood in the water, that's when he pounces and buys it when it's down.
Absolutely.
I agree with that theory. You buy on the down, you don't buy on the up.
That's why I don't mind Apple being a little bit down today. All green except for Apple. Apple's got a lot of cash.
By the way, Jim, is very typical. When the whole market in the last few days was down, Apple was going up every single day. So it's kind of a reversal situation with Apple.
Right.
However, allow me, please. There is a book that I always show as a reference, Market Wizards. And there is a very interesting interview with late William O'Neill, who is invented Investors Business Daily, which his desk was recently acquired by, I think it was by Dow Jones company. So it's now Dow Jones. So here is from this interview, Nick, specifically for you. The question, when did you first find an approach that worked? Answer. Back in 1959, I did a study of the people who were doing very well in market. At that time, the Dreyfus Fund was a very small fund managing only about $15 million. Jack Dreyfus, who managed the fund, was doubling the results of all of his competitors. So I got copies of their prospectus and quietly looked at their quarterly reports and plotted on charts precisely where they purchased each of their stocks. There were over 100 of these securities, and when I laid them out on the table, I made my first real discovery. Not some, not most, but every single stock had been bought when it went to a new high price. So that first thing I learned about how to get superior performance is not to buy stocks that are near their lows, but to buy stocks that are coming out of the broad basis and beginning to make new highs relative to preceding price base. You are trying to find the beginning of a major move so that you don't waste 6 or 9 months sitting on a stock that is going nowhere. I studied the stocks that were big winners in the past years and tried to find the characteristics that they had in common before they became major successes. I didn't just limit myself to preconceived notions like price per earning ratios. I examined a lot of variables to develop a model based on how the real world works. This is something how to buy.
Question for you, Sasha. Your book, Market Wizards, does not mention David Svensson, who ran the Yale.
Not Market Wizards. That's the only reason why. This book is about Market Wizards. He is not, and Warren Buffett is not in this book as well. He's not.
Why not? Why not? You know, Warren Buffett has returned, Berkshire Hathaway has returned double the market average for over 50 years. David Svensson runs the most successful university endowment fund on the planet. Why are they not in that book?
Your story about Warren Buffett's put a lot of bread on his table, but not on mine. That's why.
Well, I had nothing but Berkshire Hathaway for nearly 20 years, and he put a lot of bread on my table.
Yeah.
Why not on yours?
I will have to say the one thing that's most impressive about that story is that he did it before computers. I mean, that was a lot of sweat equity going into that analysis. Computers now, you can do it much more quickly to get the same kind of data.
Also, the trading costs are a lot less now.
Absolutely.
People have no idea when you used to execute trades how expensive it was to execute a trade. Today they've got down next to nothing, so you can get in and out.
Discount brokers, and now the discount's not even important.
Yeah.
When you were doing trades in Questrade, which are located about 2.5 miles from my house, they stopped any commissions last Monday. No commissions. You can buy 1,000 shares of NVIDIA.
I don't know how they do it.
$170,000.
Yeah, I mean, we used to call it, because I was eating on the other side of that trough years ago. And now when I see it, who would want to get involved in a business where you can't make any commissions? I don't get. That's the reason in Milan they all become financial advisors and take assets under management. Mm-hmm. But even those people, if you think, hey, they're making a lot of money, no, they're not. They used to make a lot of money. Now they're squeezed so much by the market. Your professional money managers hardly make anything. Seriously. And that's one of the reason I use them is they're cheap. A lot of people working for you for next to nothing. It's not a bad deal.
Question for you, Sasha. How does Questrade make money if there's zero commission? They got to make money somehow, and I bet they're making good money.
Think most of their staff are driving Uber, and that's how they're making money.
Driving Uber. They have to have some other form. Well, it's just like Amazon. If you look at Amazon, where they make their money is really AWS. They don't make that much on Amazon. It's really thin business.
Oh, they're offering a lot of professional services, money management, specific. ETFs. They are doing what normal.
Yeah, right. And margin accounts and stuff like that. So what they have is that is really the trading accounts right now are lost leaders because once they set the computer up, they just don't care. But what they want to do is get you to buy their other services.
Yes,
more profitable.
That's why they're in business. Yeah. Plus, I noticed one thing: they had rebates. For example, they charge $87 a month for a full information package. What you're using, trading, you need some information, charts, everything. So they used to, for certain amount of trades, they used to refund that to active traders like myself. I would get refund. So I was charged $87 and I refund $87. So virtually it's free of charge. Now there is zero commissions, but now they charge $43 a month for their package. So they get their money somewhere, somehow. I wouldn't worry about them at all. But it's still convenient. Think about this. You can buy, say, $130 a share, say 1,000 shares of NVIDIA, $130,000 transaction.
Yeah.
Your cost is zero. This is
for a very long time now, the transaction costs were under $10. Now, if you going to do $1,000 trade, commission under $10. If you're going to do $1 million trade, commission under $10. The higher the investment, the more you can ignore commissions.
Yeah,
totally.
That's true, but specifically, you can ignore them if they are zero. You can
now you can ignore them. Yeah. When I first started, there was a consideration, but now you basically.
Yeah, you're right. Yeah, when you first started, you had to think twice before making an investment because of the costs, the transaction costs.
Right.
They were significant, and people thought more.
The other thing about these corporations that it's hard, they put them in the business schools, but you don't really understand until you start investing. Is management of the company. In other words, how do you qualify the management of the company? All these companies are managed by executives, et cetera. And it showed up really big time with Microsoft in Seattle. Microsoft was moving nowhere. And for a long time, they made tons of money. But around year 2000, the stock froze when Steve Ballmer became head, and it just didn't go anywhere. Then they got this guy, Navarro, whatever his name is, and that stock, Microsoft, just took off. It shows that the management makes a big difference in these corporations.
Absolutely.
It's one of the hardest things to evaluate is how well are those managers doing for you. Warren Buffett does one of the best jobs of evaluating managers, but as an individual investor, it is really tough because all these stocks I just discussed, I'm really at a loss as to how management is doing for their investors. And that's another risk that you take whenever you buy. By the way, it looks like Hooters is going to go into bankruptcy. Well, we'll watch from something, but it's going to. Yeah, Hooters it's a privately held company, so you won't see it traded. But it looks like Hooters' business plan back to management, same old, and it's just not working. So
if you ask ChatGPT to give you the history of any manager, because that's the only way that we can judge a manager is to take a look at what he's done previously, would you get a decent answer?
I don't know. But I'm just saying when you look at it.
Never tried that. That's interesting.
See, if you look at, I'm not going to pick on Elon Musk because I know the panel here loves Elon. But when you got a guy who wants to take $100 billion pay package, okay, I would have a serious problem with him. So would Warren Buffett. In other words, I'd be out. I wouldn't invest in Tesla. When you look at the price earnings ratio, when I look at last one, like 1,500, I wouldn't invest in it, because the P ratios are too high. But that being said, it still gets people to invest in Tesla. Good for them.
Nick, there is only what can justify it is a theory of a greater fool. So you're buying Tesla and you believe there will be even a bigger fool who will buy it from you at a higher price.
Well, I did own Tesla, and I did sell it too soon.
I hear it did.
I sold it both too soon and at a great time because it was going up, it was rocketing up, and it doubled my money. So I was satisfied. I'm happy.
Right.
And then it went up, doubled again, and I was thinking, oh, I should have stuck with
why'd you get
it.
out?
Then it plummeted. So then, I
that gave you a reason why you got out too. I mean, that's
what's going to happen. I thought.
it's hard to figure out the timing.
Jim, from this example, when you just said about Tesla, can you imagine from what I just read from the book about market wizards, if people were buying when they see the Tesla on a breakout, forget about price per earning ratio, so
Right.
each new high, people were climbing and buying more and more shares. So that alone drives price even higher and higher and higher. So there are so many people who could make quite a lot of money by buying stock at the higher point and the next higher point and so on and on and on. Then it would crash at some point. But if you prudent investor and you were buying at some level, it doesn't mean to buy right at the bottom, but on the way.
No.
Actually, I like to buy stocks on the way up. I don't like to fish for the bottom when stocks are trading. Why? It's prudent to buy at the lowest possible level. The only possibility that
You don't know where the lower level is.
Exactly.
Yeah.
Sometimes it's a dead money for several months. Sometimes it's a stock made bought.
I want to see them
But
bounce
now,
back. When they start to bounce back, I'm interested.
You started to buy, and you sitting there waiting until it will start going on, but it can take several months. It's a dead money.
Sasha, you're talking about what's called momentum investing. A trend is more likely to continue than it is to reverse itself. But trend reversal is one of the few absolute certainties on the market. So yes, when the market is going up and you buy and it continues to go up and it continues to go up and a trend continues, is more likely to continue than it is to reverse itself. Trend reversal is an absolute certainty.
Except one thing, if that's correct, and if you really religiously believe that at some point trend will appear and will reverse, so then you're leaving. So then you will not buy Tesla on the way up. You will just stay around and you just don't do anything. You are leaving so much money on the table. When you're buying in small quantities, just a little bit here, then it went higher, you bought even more. But remember what I told you many times about the averaging down. I never do that. I do averaging up. So when the stock has momentum and it goes higher, okay, let's see. I bought Tesla at $300, for example, right? It went to $350, right? So my average price now, if I bought even amount of shares at 300 and 350, my average price is $325. Stock is at 350, so I'm already making money. So it will went higher to 375. I buy even more, so my average will be always less than the stock is trading. So if there will be, and of course you're right, there will be reversal. So once reversal is being indicated by the market, okay, so you sell your position or half position or something like that, but you don't leave money on the table. You start to take action and make money. This all trading, investments, and everything else is about making money. It's
We start with preservation of principle. You don't want to lose money.
Preservation, of course. Yes, of course. See, if Tesla is 300 and you bought it at 300 and it didn't go higher, it started to go down, you sell the same William and Newton rule.
As I mentioned earlier, selling puts and calls, which is a very simple thing to do, generates between 12 to 36% annually. Over the last 200 years, selling puts and calls has generated 16% annually.
Agreed.
Trying to beat that, but picking stocks is virtually impossible. Unless you're having fun in your fund portfolio, and most people are not having a lot of fun. I keep saying three things about fund portfolios. Number one, nobody needs one. Number two, make sure it's small enough that if you lose it all, you don't have to change your lifestyle. And the number three is the most important of all. Don't keep records because you're sure to be disappointed.
Okay, I must admit that I do keep records. And I like to look at these records, say about 15 to 20 times a day. And that makes me extremely happy because the fund portfolio with the strategies that I'm doing now, I started 2 years ago with 40,000 Canadian dollars. That's all. When the account went up to $200,000, I removed original $40,000. So right now,
money is the best.
I'm sitting on house money. So you tell me, how come I will not watch this this table at least 10 to 15 times a day? It's impossible, because whenever I want to do trade, immediately it shows me my overall the balance, and that makes me extremely, first of all, very proud of myself, and second of all, very
Yeah.
happy as well. So this is about fun portfolio. Nobody needs one. Well, I happen to need one. I really
And if you're not making a lot of money over time, maybe you're not good at it. Maybe you should do something else.
Hey, look, it beats playing chess for a living. That I can tell you.
Exactly. Reading.
Unless you're Nakamura or Carlson.
Unless you're Nakamura or Carlson, you're right. Those guys are pretty good.
I think a day or two ago, there was a birthday of Asa Hoffman. He was a spectacular blitz player. He won many tournaments. He was playing Fischer. Blitz, 5 minutes.
I played Asa tons of chess, because every time I went to New York, I would play. So you always have to play for money if you play Asa. But he was there, available, and I played him almost like every week, because I would be in New York every week and play Asa at the Manhattan Club when the Manhattan Club was open.
Yeah.
He was a good blitz player too, by the way. Really good.
Oh, he was very, very good.
His book, The Last Gamesman, is excellent, by the way, if you haven't read it.
I'll have to get that, yeah, because Asa
It'll bring up all those old memories.
All I can tell you, I was one of his regular customers. So he
That's how he did it.
I know. The regular walked in.
There were a couple of very good Russian blitz players. One was Henrik Chepukakis, and another one, Valentin Arbakov. Chepukakis was not even Grandmaster, Arbakov was Grandmaster. They were playing brilliant chess games, and they could play with Tal and Petrosian, just almost any Grandmaster. By the way, one was brilliant blitz player, late Yakov Yuchtman from Odessa, and I knew him personally very well.
Well, no one has monetized it the way Nakamura has, though.
No.
Yeah.
Nakamura
is his big name that everybody knows, but Yuchtman,
We passed our time. We're going to be put to bed.
Okay.
Okay.
Great to see you all.
It was a great show. Thank you very much for participating, and have a great trading, and we'll see you next
And root for green.
same place, same time. We are in green. Thank you.
Cheers.
Cheers.
Bye-bye.
Yeah.
Bye-bye.